This is Alan Bush with the Daily Financial Forecast for Thursday, January 16th. Stock index futures are mixed to a little bit lower this morning. We did have a series of economic reports today coming in offsetting, with retail sales in December increasing 0.4% when up 0.5% was anticipated. However, the January Philadelphia Federal Reserve Manufacturing Index was a surprising 44.3 when -7 was estimated. Recent softer than expected inflation data earlier this week seems to be somewhat of an underlying supportive factor for stock index futures, accounting for recent gains this week. Still looks like the Federal Reserve will probably be accommodative, but maybe not quite as accommodative as what had been anticipated late last year. In the currency markets, the dollar index trading higher. Still looks like the long-term fundamentals are supportive to the dollar index, and so are the technicals. We did have the European Central Bank today indicating that interest rate cuts would be appropriate if baseline projections hold. This according to the minutes from its December policy meeting. Also, we have the gross domestic product in the UK, a bit on the weaker side, coming in up 0.1% in November, missing the guess of up 0.2%. So still looks like lower prices are likely for the euro currency and the British pound. And in the interest rate futures markets, seeing futures lower across the board. Still looks like the FOMC will keep its policy unchanged at the January meeting, also for the March meeting and the May meeting. However, it is likely that at the June meeting, the Fed will cut rates by 25 basis points. Fundamentals and technicals still appear to be a bit bearish on balance, especially for futures at the long end of the curve, namely the 30-year Treasury bond futures. I think we can probably see lower prices in store for futures at the long end. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or ADM.